Welcome to another episode of Ultimate MBA podcast. Today with us we have Ritesh M Jain. He is a celebrated investment guru, has headed a lot of mutual fund houses back in India, and now he heads his own investment advice company and research company in
Yes.
Canada,
This is based out of India only. This is for
India.
NRIs to invest globally. Sorry,
Okay,
this is for resident Indians to invest globally
okay,
because resident Indians have been investing only in India. But I
yeah,
think over last few years, because of LRS related limits, they've been
yeah,
looking to invest globally, and there are enough opportunities which are available globally, which are not available in Indian equity markets.
yep. So, Ritesh, you've written extensively about Canada. I follow, and people who are listening to me, please follow Ritesh on LinkedIn and Twitter. He's amazing, and he's writes extensively about Canada, emerging market, developing market. And you
Hmm.
wrote a very good article about three ways Canada can go in the future, because
Yes.
right now we are in sort of a crisis. So, Ritesh, what are
Yes.
those three directions that you see Canada going?
So I just gave a presentation to a large corporate a few days back, and I wrote to them that, and I summarized them, summarized it with, three parts, and I wanted to be a little bit politically right on that thing, but let me put it this thing in very plain and simple in front of you. One will be we'll be looking at decades of stagnation, and these are not my words alone. Actually, OECD has come out with numbers that Canada will be the worst performing economy from 2020 to 2022 to 2030, and even till 2060, they said the economy is just so imbalanced that if you were to balance that economy, it has to go through stagnation period. That so you will be looking at what kind of GDP of 1.5% for years to come. So it will feel like that you are existing, but you're not living. What does
Okay,
stagnation looks like? Existing, yes, you will exist, you will not living, and slowly things will start deteriorating around you. It will be such a slow motion wreck that you will not be able to, your eyes will not be able to look at it. But anybody who visits Canada, who would have visited Canada in 2020, will visit Canada now, and maybe visit Canada in the next few years, will obviously be able to you know see that thing, that the deterioration of a great country is happening in front of them. It doesn't necessarily needs to be that it doesn't necessarily needs to be that. The second way, which most emerging markets have done, inflate away the debt. Inflate away the debt like what Japan is doing.
okay,
Emerging markets have done. India has done it for a long period of time. This is good for home values and gold, but inflation will become systemic. This is like financial repression. So
okay,
today, Bank of Canada is trying to regain its credibility, okay, by saying that no, I will not allow this option to be on table as of now. This is very clear. They're saying we will not allow this option to be on table. So if you do not allow this option to be on table as of now, then stagnation is the most likely outcome for coming years. Now there is a third possibility, which is the easiest possibility, easiest thing which Canada can do: open Canada for competition. Just
okay.
open Canada
And
for competition.
would they do it? I mean, because they are
Mhm.
literally monopoly, oligopoly, so to say,
Oligopolies.
two, three
Yes,
companies. Yeah,
oligopolies is this the biggest problem. Oligopolies are normally in any country have a regulatory capture. Four,
yeah.
five of them have 80-90% market share. They have a regulatory capture. So there has to be a political will to open Canada, for foreign competition. And mark my words, you're next to a $30 trillion GDP economy. If you were to open Canada, then I can assure you that this will be a completely different Canada we will be looking at in the next few years. Uh, do you know that 86? So why I'm saying that stagnation word so much? Do you know that since COVID bottom, 86% of all the jobs created in Canada have been in public sector.
Yeah,
86%.
I've read that it is they do not contribute anything to the GDP. I mean, productivity to the
You know
GDP,
the
right?
biggest that public sector, the productivity in public sector is lower than productivity in private sector, and we've seen it in any emerging economy.
Yeah.
Now, if I were to add more jobs, so 17% of the jobs were created in large corporate. So
Okay.
you will say, Ritesh, this is 86 plus 17. Your mathematics is not working actually, right? It is 103%, correct? 86
Yeah.
plus,
Yeah.
right? So you'll be surprised to know that we've net lost 3% of jobs in the small businesses.
Okay. That's a huge shocker,
Yes,
which everyone does not capture it.
we've not added jobs in 2 years since COVID bottom. We've actually lost net jobs. You would know that any country's lifeblood is small business,
Yeah.
innovation. because of whatever reasons. I don't want to get into the reasons. It is small businesses are finding it extremely difficult. The environment has turned extremely difficult, challenging for them to function with profitability since COVID. You can say some of it has to do with bureaucracy, you can say some of it has to do with finances, you can say some of that has to do with inflation, whatever it is. But a country's lifeblood is this. As oligopolies become more technological advanced, they will not be adding jobs. Please understand, they will not be adding jobs. Oligopolies don't need to add jobs because technology can become better and better and better. Banks will be like banks and telecom companies increasingly will not be adding jobs, right?
And we're seeing
Because
that layoffs happening, right? Major banks in
yes,
Canada are laying off, major telecoms are laying off.
so that the reason is different for that. Canada is a one leg pony, which is the real estate. Everything is revolves around the real estate, and our policies actually promote real estate over real business investments. So now this thing worked beautifully till the time real estate prices were going up. But once our real estate prices starts moving down, because people don't know that the biggest asset on our banking book is not business loans, it is mortgages.
What
It's a very
percentage of the
simple thing.
economy is what percentage of GDP is real estate and real estate related activities?
So there are very different ways of looking at that thing, but it is more than 20%.
Okay, so your one-fifth of economy
Yes,
is
and we do not know additional. I cannot add indirectly jobs, but there will be periphery jobs. So there is no way of taking. How many of jobs can be created outside of this particular real estate? But it is so this economy has actually over a period of time the imbalances have built up. Now people compare it to US. US imbalances continued till 2008. They got the Lehman crisis. Okay, the house value reset it. Fraud went
by a
out of the
shock.
system. But here, we did not get our Lehman movement. Are we going to get a Lehman movement? I strongly believe that we cannot allow a Lehman movement in Canadian banking simply because uh, in US it's a much more diversified economy. They can allow
Yeah.
Lehman movement and get away with that. We cannot allow. So I think within next 12 months period, and why I'm saying 12 months period, I'm very clear about it. Because banks did a very interesting thing over here. When the mortgage rates were rising, they did not increase the mortgages, the resetted mortgages. They did not pass it on to the borrowers. They
Okay.
kept the EMI same.
Okay.
So a guy who was having a 30-year mortgage ended up with current mortgage outstanding of 70 years.
Yeah.
Think about it. If your outflow on your mortgage remains the same, okay, you will continue spending your money.
Okay.
Economy will
Yeah.
look stronger to you. If you're Bank of Canada, you're saying economy is stronger, jobs are not going away because banks have not passed on the mortgage increase to the borrowers. Now they are being forced to pass on the increase to borrowers. Okay, some of the banks did not have any mortgages beyond 30 years. When I was looking at their 2022 results, in 2023, in June, there are banks where 30% of their mortgages have an outstanding maturity of more than 30 years. It's like you are not indebted for life. Your next generation is also indebted for life.
So basically, you're not buying a home and basically you are giving your life to the bank, so to say.
Absolutely.
70 years mortgage is
Absolutely.
what? Yeah.
We should not have allowed that thing. I've seen letters of 70-year, the mortgage remaining period, amortization period remaining of 70 years.
Yeah.
Now, all these things worked till you can pass it on. It's like postponing the problem into the future. If you can postpone the problem into the future, then you do not think that there is a problem. Till the time you have to take on that problem. Okay. Now banks are becoming increasingly concerned. CHMC is becoming increasingly concerned. Bank of Canada is becoming increasingly concerned. But what can they do? They cannot do anything. The If you do not allow your resources to be exploited and sold for country's benefit, right? Like I'm just talking about policies. Our policies do not promote fossil fuels anymore.
Yeah.
I have no views on fossil fuel. I say we require fossil fuel to liquefy Canada's
And
finances. Okay,
I think Canada's Calgary's natural gas can. power
everything.
every
Yeah. So
damn
I'm not
home in Canada without any charge to us, right?
exactly. So a country like India does not have natural resources to that extent. Canada is very lucky economy that even if there is a fiscal problem, monetary problem, or any economic problem, you can rectify that problem by exploiting your fossil fuels, liquefying the economy to a certain time. But what we are doing is exactly at the wrong point of time. We are actually having policies which do not promote our fossil fuel exports. So if today our top export is fossil fuel, you are saying you cannot export fossil fuel. Okay, your mortgage rates are going up, and you are dependent upon real estate as for your economic growth. Okay, whatever it is, could be because of immigrants or whatever it is. We are headed for very, very bad times in Canada in next 12 months. I will not be surprised to see a negative GDP 3 or 4 quarters down the line from here.
So,
And job cuts
is
are
that
just
the
starting.
lagging interest rate? So, a lot of people say that interest rate lag. So, I
Try to
remember a
18
lot of,
months.
yeah,
Try to 18 months.
by a lot of realtor told me even before this month that don't worry, the rates are going to come down in January. So, I'm a renter right now, and
Hmm.
I might be able to buy a home. But they kept saying me that houses always go up in Canada; they never go down, even till last month.
It is possible. That is Bank of Canada's choice. So
Yeah,
tomorrow Bank of Canada gets worried. Let's say gets
yeah,
worried. It gets frantic calls from banks that we are in a soup, that people have started defaulting. I'm giving you a very hypothetical example, which
yeah,
I can play out in my mind. I've seen it in emerging country.
yeah.
In a country like Canada, in any country, uh, an economy is as strong as its banking system. If your banking system is strong, your economy is strong. It's very simple way of looking things. So let's say tomorrow, uh, you have more and more people started defaulting because they cannot afford these things. Their rates have gone up. Okay, these banks give a call to Bank of Canada. Bank of Canada gets panicked. They say, "Forget inflation. Here, my banking system is going down." Instead of raising the rates or keeping the rates higher for longer, they start cutting the rates. The thing is, when they cut the rate one time, then you start anticipating the next rate cut and the next rate cut and the next rate cut. This is how it
Yeah,
always
okay.
happens. Like when Federal Reserve Bank raises the rate, they don't raise it for one time. They actually raise it for an average of 10 times historically. So that is how
Okay.
you will think. So as soon as that happens, as soon as the rate cuts happen, I can assure you, currency will collapse.
TAD will go down.
Yes. So although your house value will go up, understand what I'm trying to say. Your house value will go up,
Okay.
okay, but the value of currency will fall. Between 2015 and 2020, I have a chart where your house values went up by more than 100%. Sorry, 80%.
Yeah.
But 40% of those 40% of those returns came because Canadian dollar went down against US dollar by 40%.
Okay.
We were in 2014, USD CAD was 1 is to 1. 2022, USD CAD is 1.4. So CAD is already down 40%. If you tell me, Bank of Canada will cut the rates and all, yes, they can cut the rates. Tomorrow they get panic and they cut the rates. USD CAD will be 170, 180. Inflation will become 6, 7, 8% and will remain there for a long period of time. And if Bank of Canada does that thing, you become an emerging economy that way.
So, and you do not have the passion of an emerging economy. Emerging economies will do anything and everything to become a developed economy, but here you do not have that passion. You have high
So,
taxes.
so you have a problem.
Yeah.
The only way out of this problem, there are two easy ways. Allow your natural resources to be exploited at least to that point of time where you can, rebalance your economy or open Canada for competition. There is no third way you can get out of this mess, I can assure you.
And then you have University of What? I mean, I read a lot of articles which say that University of Waterloo, which is like one of the best universities in the world, or McGill, their grads go out to US and get 6 times the salary that they are getting here.
Why should you stay in Canada? Shouldn't you be going to US? Actually, you're absolutely right about that thing. That if there are people who are getting opportunities to go to US, they are going to US. So we are leaving. We are not keeping the best talent with us. And what we are getting from India, which is 40% of the student, is white collar workers. We don't need more MBAs, CFAs, FRMs, CAs. We don't need them. We have too many of them. We need blue collar workers. But what we get? White collar workers.
So basically, your
You have
PR
blue
score
collar.
is so high that only. So I got a PR recently, and if you are a PhD, if you are outside Canada, then only a PhD can get you a PR. And I don't think we need a lot of PhDs in this country right now.
Sachin, last week I had two people. I was in Uber. I had to go out, so I took an Uber going out over there and coming back. What are the chances that first time you will get a PhD driving you? Second time you have a microbiologist driving you?
100% in Canada, 100%.
And this is Calgary, not Toronto. I've heard all these stories. This is Calgary. We don't need
Okay,
white collar workers simply because we don't have jobs. Why don't we understand we're an oligopoly country which cannot create jobs? If we cannot create jobs, innovation is not there, and taxes are high, then please, white collar workers we don't require. We require blue collar workers. So those white collar workers come here and do blue collar jobs.
okay,
But what people don't know, Canada's per capita GDP has remained same for the last 15 years.
that is around
Yeah,
44,000
yeah,
Canadian dollars.
47, 48,000. It's the same. Your income has remained same for the last. We get so many immigrants, or the productivity of economy is so low that your salary is same, but the house prices have more than doubled in the same period of time.
Okay, yeah. I mean, basically, you're earning less, you're paying more.
You're earning same, but you're paying more. Now you can say, we are earning till it did not matter till 2 years back. Why? There is a income, which you see income flat. On the other hand, you see assets. If the asset values are going up, your real estate values are going up, you still continue to take loans. You still continue to take mortgage. You still continue to buy the new house because your focus is, I have made a house. The house has gone up by 40%. Let me live my life by borrowing from the market.
Okay,
Getting the
yeah,
point? The best way an economy can grow is where incomes are not growing or incomes are not growing in line with asset prices. But over the last 15 years, our policies made sure our asset prices continues to rise. Incomes have remained stagnant. This is a problem. Now asset values have also started going down, and suddenly more and more people are feeling, blind because my income has not gone up. My real estate values has also gone down. This will lead to massive drop in consumption, and more people fighting for the same jobs. 60-year-olds, which should be getting into their sunset years, retiring, even they will not retire. You're getting the point that
I'm
even
getting
the
your point.
older, you will find more and more older people around you finding, you will find that they'll be working because they do not have not created enough of the nest egg to enjoy their retirement. So even if you're looking for employment increase, you cannot have because those people will not be leaving their jobs.
Yep. I do see it in Tim Hortons or Walmart or otherwise that I see a lot more older people now sitting behind the cash counter or sitting behind the grocery center.
Absolutely, this is policies. These are really policies. Yes, something is happening on startup capital, startup. But startup worked till the time the venture capital money was available when interest rates were 0%. That happened worldwide. It happened to Canada also. When the interest rate starts rising, you start having even a lot of startups closing down. It's very difficult to get money, right? It's very difficult, whether it's India, Canada, or US, it's very difficult to get money. So you will have even that startup boom, actually, which we are seeing in Calgary, might not continue with interest rates at these levels.
Okay. I mean, that's the zero interest rate phenomena that a lot of
Yes.
people call.
That led to a lot of zombies that everybody thought they are a great investor. You buy anything and it goes up in value. When the value of money is rising, then the value of assets have to go down.
Yeah, and I've not seen 6% for people listening in India. 6% is the FD rate right now that's going in Canada. I don't
Yes,
think anyone has seen it in a long, long time.
go to peer-to-peer lending platforms where the default rates are zero. You can actually pick up in peer-to-peer lending platforms 12 to 13% return in Canada. Most
Huh?
people don't even know these options exist because they do not go outside their banking system. But if you start adding a little bit of knowledge to yourself, you can actually make your money work for you. There is a time to be a
That's
spender or investor. There is a time to be a saver. This is a time where your savings are working for you. Unless
okay.
Bank of Canada decides to cut the rates, as your realtor is saying will happen next year.
Yeah. I hope they make economy more structurally sound so that, they don't have to do it again in 5 years.
No, the thing is, Canada has enough buttons to do it. You need a political will.
Already to do
You
it.
need policy changes. Canada has everything. This is a lucky. So I call Canada the second luckiest economy in the world. Actually, the luckiest economy in the world is Australia. There's a difference between the two recessions time. Australia had the highest amount of difference between the two recessions. Canada had the second highest difference between the two recessions. So people have not seen the last recession was 1992. So do you see that people have not seen a recession for what 30 years kind of thing in Canada?
It's not in the memory of people. They do not know how
Yes,
it looks like.
exactly. So that is why if they want, since you've not seen the recession, your imbalances have continued to build up. You thought the policies which we were having are working for you, but these were the imbalances which were building up. Either accept a stagnation for the next 10, 20 years or make your policy changes now.
So what does it mean for 1 million immigrants and a lot of them come from India? So a lot of Indians I see coming to the diploma colleges here. Like what does it mean for them?
Let me first give you a little bit of statistics about India. In 2013, India and Canada's GDP was same,
Okay.
$1.85 trillion. Now I'm quoting IMF number. In
Okay.
2027, India's GDP will be equal to Canada's GDP plus Australia's GDP plus 25% of UK's GDP.
So basically three places where Indians like to go.
No, this is how big India has become in the
Yeah.
last 10 15 years. And these are the places exactly where Indian likes to go.
Yeah.
Canada's per capita GDP has remained same. India's per capita GDP during the same period of time have doubled. Okay. If you want to come to Canada, don't go to diploma colleges. Go to either universities or trade related colleges. There is so much push marketing happening in India for coming to Canada. Okay. But do your own due diligence. If you go to a good university, you will land a job. I can assure you there is enough opportunities. If you go do a good course from a university, good university, you will land a job. And Canada has good universities, whatever said and done. Or do a trade related. There are agriculture colleges, who teach you agriculture techniques. There are colleges on trade related, small diploma courses on trade related. I know in Calgary, if people today ask me, where should I send my kids? I said, have a look at this college. They are actually preparing for tomorrow's jobs which are going to be there tomorrow. They're not doing it what they've been doing it for the last 20 years. So I say
Yeah.
there's a 6 months course, let them do a 6 months course, and after that they will be landing a job, and a job where it's not working in Tim Hortons, a job which is actually in the field. But most of the kids these days wants to only work on laptop. They don't want to do real life jobs. That is the hard work. So if you are willing to do a blue collar job, come to Canada. If you can get into a good university, come to Canada. Otherwise, India's GDP in the same period of time have doubled. Yes, you can say from a low base, the opportunities in India in the coming years will be far, far higher in every other things apart from the two things which I've said than in Canada.
In a growing economy, you feel very optimistic about your future. Like I've seen that India has unlimited optimism within themselves. So they do not
It's
talk
a
about
simple thing.
everything that we talk about right now.
12% nominal GDP, 6% real GDP plus 6% inflation, 12% nominal GDP is India. Canada is 1% GDP plus 3% inflation, 4% nominal GDP. Now you do a compounding for the next 3-4 years, have an answer in front of you.
Makes sense.
And it's not that the competition is less in Canada now. For every small position, I know there are few hundred applications.
Are there people piling you up as well for internships or jobs?
Yes. So I was looking for an internship, and the kind of CVs which I got over here were amazing. I will not get those things in Bombay also.
Okay. Well, that's a bit on the sadder side as well. That a lot of people who come, they have a different dream. So actually, I mean, I've seen a lot of YouTube videos in 2018 and 2019. Everything was presented so rosy to people.
No, 2018-19, it was there. Let me put it this way.
Yeah.
COVID changed a lot of things for this economy. People will come to know in next 2-3 years. It's not that things change and people come to know next day. They're still going in their own mindset, looking at old videos and saying this is what it is. No, it is not. It has changed for the worse, and it is not only Canada. Actually, the entire developed world, actually they borrowed so much money from the future to spend it in present that they've created all these problems. Canada was having more imbalances than rest of the G7, so it will have more trouble than other G7 countries.
Okay. We are almost at the 30 minutes mark that we budgeted for, and it was an amazing discussion. I would maybe like to do a follow up with you in maybe 6 months
Yeah,
from
yeah.
now.
Sure. Let's see how these things plan out. I don't want them to be right. For my future, for my kids' future, I can just see the policies
But
mistake,
at least you're
policy.
telling the truth. You're not saying that homes always go up. You're not saying that everything is rosy. You're at least telling the truth.
No, homes goes up. You can trash your currency. If you trash your currency, homes will go up. It's a very simple process. We've seen it
Yeah.
in India also. We've seen it. India doesn't do it anymore, but we've seen it in every emerging country. But this is actually happens only in emerging country. That is the day you transition into an emerging country if you allow. Yeah. Okay. Have a good day.
Thank you, Ritesh. You too. Bye bye. Have a great trek ahead.